everybody. Luke Gromen, FFTT. Hope you are well. Hope you had a great weekend. I know weather around here was beautiful. Hope it was near you as well. I'm going to jump right in. Thanks, as always, for submitting questions. Really appreciate it. Always learn a lot from just the questions, and so I really appreciate you responding to the tweets. And with that, let's jump right in. First off, a lot of questions about the potential BRICS currency that may or may not be announced at the upcoming BRICS meeting early in August. To me, the most interesting thing maybe thus far about it is that Yellen, when asked about it, didn't say it isn't happening and it'll never happen. And when she was asked about it, she cited basically that the currency project in question. Maybe it's a faux pas on her part in the way she answered it, and certainly in recent media appearances, in my opinion, most notably back when she was asked about the banking stuff and deposit insurance back in March, I guess it was. She's had a few of those, so maybe that was it. But to me, that she did not come right out and say, it's not happening, it isn't going to happen, it isn't going to work, I took as a sign that she knows something is coming, and that she doesn't want to look foolish in a few weeks when it does come out, having just said it isn't going to be coming out in less than one full news cycle. So I think it's a sign that they know something is coming. Now, will it matter? I think that depends on construction and etc. There's a lot of different factors. But let's just leave it at construction. Ultimately, in my opinion, a tie between gold and energy that is produced within the BRICS bloc and consumed within the BRICS bloc is far more likely, far more important, far more interesting than any tie between the various fiat currencies within the BRICS and gold. And that's what most people seem to be focused on. I think that's a mistake. I think the key is the relationship between gold and energy, and in particular oil, and in particular the relative prices between the two. Zoltan Pozar talked about it. We've talked about it, where if you re-rate the price of gold in barrels of oil, which they could do, free markets will do the rest. We've seen how fungible oil is. We've tried to cut Russian oil off since last year. It's still flowing just fine. So that, to me, the gold-energy relationship, I think, is much more interesting than any potential gold-fiat relationship. What do I make of news that India is backing out of it that came out either today or yesterday, maybe a couple days ago? Here, too, it depends. Too early to tell. Is India really backing out? Or is this another case of Russia is collapsing into civil war from a couple weekends ago? Or before that, Putin is going to be dead of cancer within a few months from early last year? Point is I just don't know, and I don't think anybody knows. So there's a lot of fog of currency war around all of this, which makes sense because these are really big issues. In my opinion, we are nearing a major turning point in the global monetary system, global monetary history, one way or another. The reason I say that is because we are in peak cheap energy, peak cheap oil. I think that's undeniable based on the geology, based on things we've talked about before. And peak cheap energy is fundamentally incompatible with the current debt-backed monetary system as it's structured. And so unless there's an energy productivity miracle, as we've said over and over, the existing monetary system is going to change. Either it's going to change via action, or it's going to change via collapsing into something else. So that's the thoughts as we sit here today on Monday night as it relates to the BRICS currency developments that have come to the forefront in recent days and weeks. The next question is from Brennan. What happens to oil if Yuan devalues? It's a good question. I think let's take a step back. Under the system where oil was only priced in dollars, if you devalued the Yuan, then oil would go up in Yuan. Supply-demand 101 would tell you that Chinese oil consumption would go down as prices went up in Yuan. Global oil demand then would go down, given that China is the world's biggest importer of oil, and therefore oil prices would likely go down. So that's how it has always worked up until at least 2018. Now, 2018, Shanghai oil contract is rolled out with increasing amounts of yuan-denominated oil from Russia and elsewhere. If China wants to stimulate their economy, devaluing the yuan versus the dollar is no longer the only lever. Why do they want to devalue the yuan versus the dollar when increasing the yuan against oil, strengthening the yuan against oil, would stimulate their economy on a real basis, right? You make energy cheaper, you're actually going to stimulate your economy on a real basis, not just via inflation, which is what you do by devaluing the yuan versus the dollar. Now, yuan oil in this whole process means that gold's the reference point, no longer the dollar. So most investors seem to be waiting for, most is maybe too strong, many investors seem to be waiting for China to devalue the yuan versus the dollar to stimulate. They're not considering that yuan oil, which is a thing, could be used to devalue oil versus the yuan, which can be done by increasing the gold to oil ratio in China, which tells me the play here might not be sell the yuan against the dollar. The play might be buy gold rather than sell yuan or sell oil. So hopefully that helps share some of the thought process. It's not definitive, but I think it's important to understand that the world has changed. It's no longer just oil in dollars. And because of that, because oil is available in yuan, that changes the calculus potentially in some very important ways that we just talked about. The next question from RF. What's your go-forward view on 1, total global liquidity, and 2, relative strength of the dollar? Total global liquidity up, US dollar down. Look at that. I can actually say something quickly. Why do I think that? Simple. Because that is what needs to happen for the U.S. government not to have a funding crisis in coming quarters. Dollar down equals inflation up, equals tax receipts up, equals nominal. That allows nominal GDP to stay above rates. Full stop. Nominal GDP goes below interest rates with debt to GDP at 125% and deficits at 7% of GDP at the peak of the economic cycle. Katie bar the door, it's over. So you go into a death spiral. You go into rates up, GDP down, rates up, GDP down. It's a bad situation. They got to keep nominal GDP up. How do you get nominal GDP up above rates? Given where we are in the cycle, you got to get the dollar down. You got to get liquidity up. It's a little bit of two sides of the same coin. You get the dollar down, liquidity will go up. From BR, why do you think it has been okay to start talking about the cracks in the dollar system, i.e. Yellen in China talking about the eventual demise, as well as Powell saying U.S. could lose reserve status? I think we are a long way off from this, but why are they talking about it now? I think it's probably mostly politics, particularly in the case of Powell, to try to scare Congress into cutting spending. In the case of Yellen, it's probably some politics as well. A weaker dollar helps her for the reasons I just highlighted, that you got to get the dollar down to get inflation up, to get tax receipts up so that she doesn't have a funding problem. I think it's also partly, as I noted before, she's probably getting briefings on this stuff and she probably knows it's coming in some way, shape, or form. Will it be successful? Who knows? There's ways it could be made very successful, particularly as I noted before, if you bring gold in and tie gold at a higher gold to oil ratio to energy, not to fiat, to energy. So as a result, I think she probably can't ignore it. And out of nothing else, the fear of looking silly if it does come out. So that's why I think it's a signpost on timing. This was stuff that 5 years ago they didn't even bother answering. You got laughed at for even asking it. So I think there's some informational value just in that. And then the final question from DB Cooper. Hi, Luke. You expected a Fed pivot in 2022. Now that hasn't happened. Are you still expecting one in 2023? I expected a Fed pivot. I didn't get a Fed pivot. You know what we got? We got a Treasury pivot last year in the third quarter in September. Dollar fell at 11% and a quarter, 40% annual rate in the fourth quarter after it had rallied 2Q and 3Q. And as I just noted, you get the dollar down, that is functionally indistinguishable in terms of liquidity to a Fed cut. So I would also argue that, you got the BTFP in 1Q23 in response to the bank crisis. I think that was a soft Fed pivot. Fed certainly had the opportunity to stand aside and let the banking system go. They didn't. They basically implemented yield curve control for banks. That's a soft form of QE, soft form of yield curve control. So I expect more liquidity to continue incrementally from here. I think the Treasury buyback program that is said to start in 2024 likely to be a part of that. So DB Cooper, wherever you are, having jumped out of that airplane in the 70s with a whole bunch of money and never found, hopefully you're living it up out there at any rate. So with that, I'm going to sign off for tonight. As always, if you like these updates, check out FFTT-LLC.com for more information about what we're up to and our Tree Rings product, 10 most interesting things, a brief synopsis about what grabbed our attention about them, and whether it refutes or supports a way we'd been previously thinking about the world. So thank you as always for joining me. I'm going to go watch the Home Run Derby, and hopefully you have a great night, and we'll talk with you soon. Take care, everybody.